Welcome to TradeTheMBI.com. This is John. This report is for the 16th of March, and well, we got the expected, at least a guaranteed priced-in quarter point that the Fed promised. We would have shot well over 2,400 had there been no increase. The interesting part about it was that when asked by a reporter, the chairman of the Fed, Yellen, acknowledged that yes, we have falling GDP in this first quarter. Not to mention nothing really spectacular. There's been no wage pressure simply because, lo and behold, they found that even with the unemployment reading what it is, there's still plenty of slack in the means of additional people are getting hired without any problem. And that just points to that labor participation being so low that there's a huge amount of room to fill in new positions without really putting pressure on wages. And inflation is still at the bottom end of, their target was over 2%, and it's only been in the one something. Oil is going to continue to be a deflationary pressure because that ability to ramp up supply is really making it difficult for the markets to grapple with that concept. Now, we had an immediate return of the cyan, which is shorts moving below our long-term buyers. That is always a strong impetus. The fact that we never saw any retrade, all we expected was a return to the ABM green, which we got close to, not quite, and propelled right off of it. Still overbought, no question about that. We see the positive extreme. There's going to be a backfill into these at a certain point. We're not too concerned about it at this particular stage. What we wanted to see was this reduction of the shakeout, particularly an evening out of this azure and blue lines, which means that there's more stability within it. But as long as that cyan remains under the red, you're in buy configuration. It's much cleaner even on the NASDAQ. And supposedly this is defying what some people think, but not really. The interesting move about that is this spike in the euro. Central banks have been really big on this, and particularly the Fed, in wanting to support the euro. It definitely helps with raising rates. You need the euro to be climbing and get back up into that. It's a little bit counter to what you might expect. And the fact that you didn't have a continuation of populism movement, at least in the Netherlands, so that is a net positive for the euro from that standpoint. Of course, you still have France, but I think the belief is that things will stabilize, and if Le Pen isn't going to have any major impact, then I think we could see the dollar-euro range get right back up into the range, which is already achieved right now, right at the bottom side of the base of the range that we expect. So, power of central banks. Strong move for bonds. Obviously, it was a little overreaction. We talked about that. Will it be sustainable? Unlikely. I don't think so. We're still headed towards the bottom end of that, and a little pop back for oil as looked like supplies of gasoline were lower, but at the end of the day, crude still huge. I mean, you can see this is minus 26 on the shakeout. That's not going to be a sustainable bounce, so we're going to move back to the bottom range shortly. And like we were talking about, strong crossover at the start of the day for gold with the green and orange moving right down to it. It needs to go a little further for it to be a sustained move, but in line with our expectation that gold should skyrocket. So we started off with the nice turnaround from the shakeout all the way back from the other day. We were talking about this being still a long setup, and I know a lot of people were concerned doing that within the preparation of the Fed announcement, but we had a majority of the time with the cyan, even on a 5K underneath, and every time we had a DOC spread come through there, we immediately had the reset of the orange. And like I talked about, shakeout, turnaround plus, that's another opportunity to enter. We reset again, another pop back up right there. And then finally we ended up with a move of the orange above 13.5. At the same time, we got the DOC spread with the cyan moving above, and that created a little bit of a pullback into there, filled in positive extremes going back a little ways. Not too much, but it was just a healthy reset, and right back at the highs here in pre-market at this particular point. Cyan's still below red, so even when we get the little reset, another number two, which was the crossover with the orange below, and took off right there. And of course, we've been at above the long algo for the most of it. This was the only dip, and barely dipped below the short algo there for a brief moment. So all in all, I think that we've been on target. All the naysayers. I mean, I had promised that we would hit that 76 range, and as soon as we did, that forced even more short cover, and sure enough, it propelled us. So we could see even when we had the dip that it was an opportunity to buy at that 23.60 again, and here it is, almost another 20 points. Almost 30 points actually from that original buy again. So this goes back to that 22.80 buy, and then 23.60. We've been solid with this. We've been just remarkable effective as far as knowing where this market was headed, despite a lot of the doom and gloom. And I mean, I think it was dozens of articles about how all the smart money was leaving this market. Well, yeah, if they left that market over 100 points ago. So, yeah, real smart. It's always fun to see that. I love it when they call it the smart money is selling. Well, it clearly wasn't that smart, was it? They clearly weren't able to get the right stage. That doesn't mean that we're not going to have a retrace. It just means that they just couldn't see the short-term cycle of where things were, and that's power of having the right indicators. As always, look for me on the Skype chat. Trade well.